Have you been holding on to Iraqi Dinar or Vietnamese Dong for years, waiting for that one big break? Well, today, we're diving into some breaking developments that could completely reshape your financial future. Imagine seeing those currencies hit numbers that seem almost impossible right now. Could the Iraqi Dinar really reach $5.90? Could the Vietnamese Dong climb to $4.29? These aren't just wild rumors anymore. They are emerging scenarios fueled by very real shifts in both economies. Over the next few minutes, we're going to break down everything you need to know: the projected rates, the government moves, the economic drivers, and what it all means for you. Stick with us until the very end, because this might just be the most important currency update of 2025. Let's start with Iraq. For the last several years, Iraq's economy has been slowly but surely climbing out of a tough spot. The government has been pushing major reforms in its banking system and becoming much more transparent. A huge factor behind the dinar's potential strength is the incredible recovery of Iraq's oil sector. As one of the world's top producers, Iraq is not just meeting its production targets, it's exceeding them with better efficiency and higher exports. This flood of oil money is allowing Baghdad to pour funds into rebuilding the country, upgrading public services, and boosting investor confidence. All of these are critical steps for increasing the demand for the Iraqi dinar on the world stage. Banking reforms are another game changer. Iraq is finally moving away from a cash-heavy system and into a modern digital financial world. This means stronger monitoring of transactions, more electronic transfers, and aligning with international standards. A transparent, secure, and modern banking system is absolutely essential for attracting foreign investment and stabilizing the dinar. When you reduce corruption and build reliable financial practices, global trust follows, and that trust historically sets the stage for a currency to appreciate. For any investor, these are incredibly encouraging signs that Iraq is serious about long-term growth. So let's talk numbers. Some analysts are pointing to a potential climb toward the $5.90 level for the dinar in the coming years. Now, while that's a massive jump from where it is today, it's based on achievable goals like steady economic growth, ongoing infrastructure projects, and stable oil revenue. But I want to be very clear: no currency moves overnight. Appreciation happens in steps following clear economic milestones, political stability, and international trade confidence. So, if you're holding Iraqi dinar, you should see it as a long-term play, not a get-rich-quick scheme. Strategic patience is your best friend here. Now let's shift our focus to Vietnam, because the story there is just as compelling. Vietnam's economy has become one of the fastest growing in all of Asia. It's a powerhouse of manufacturing, exports, and foreign direct investment. Huge global companies, from electronics giants to car makers, are rushing to set up shop in Vietnam to take advantage of competitive costs and a skilled workforce. This surge of outside investment is strengthening the country's reserves and building a solid foundation for the dong to appreciate. Here's the big news. There are reports that Vietnam might switch to a managed float exchange system. If this happens, the currency could finally reflect its true economic strength and move towards that $0.29 mark against the US dollar. A managed float would give the dong more flexibility while still letting the central bank step in to prevent wild swings. Right now, Vietnam pegs its currency to the dollar, which offers stability, but also puts a cap on its growth. By adopting a system that allows for gradual appreciation, Vietnam could let the dong rise naturally with its booming economy. Other fast-growing economies like China and South Korea did something similar, and we all know how that turned out over time. Vietnam's fundamentals are looking fantastic. Exports have skyrocketed, foreign currency reserves are at record highs, and public debt is well managed. At the same time, industries from manufacturing to services are expanding at an incredible pace, supported by major trade deals. All these factors together create the perfect storm for a currency that could steadily appreciate. For investors, holding Vietnamese Dong could be a rare chance to get in on an economy that is moving into the big leagues but is still undervalued in terms of its currency. But again, these things don't happen in a flash. For Iraq, it all comes down to stable oil production, cleaner government, and a modern financial system. For Vietnam, it's about keeping that export growth going, attracting more foreign money, and successfully transitioning to a more flexible currency system. Both countries need steady progress and favorable conditions over time. Patience is absolutely critical. These currencies will only strengthen as their economies deliver real, measurable results that justify a revaluation. Demographics also play a huge part in this story. Both Iraq and Vietnam have young, increasingly educated populations. This is a massive advantage. Growing workforce fuels consumer spending, supports industrial growth, and attracts foreign capital. This demographic bonus builds economic resilience and strengthens the national currency. How each government harnesses this human potential will directly impact how quickly and how much the dinar and dong appreciate. As an investor, you should be watching these efforts very closely. Of course, we have to talk about volatility. Foreign currency markets are unpredictable. If you're holding dinar or dong, the smartest approach is to treat them as long-term positions. Short-term speculation is a recipe for frustration and unnecessary risk. The best strategies are to diversify your holdings, stay updated on official announcements, and keep a close eye on global economic data. While the idea of a $5.90 dinar or a $4.29 dong is exciting, your focus should be on slow, sustainable gains backed by real economic fundamentals. Timing is everything. Currency markets react instantly to data releases, political news, and international events. In Iraq, steady progress in oil and banking is slowly building trust. In Vietnam, strong GDP growth and talk of currency reform are fueling optimism. While no one can give you an exact date, the ongoing improvements in both nations suggest their currencies are on the right track for gradual appreciation. Naturally, risks are still on the table. Despite strong fundamentals, things like political unrest, trade disputes, or a global economic downturn could negatively impact values. That's why it's so important not to overinvest. Only put in what you can comfortably hold for the long haul. Both the dinar and dong show incredible promise, but patience and smart risk management are your keys to navigating the journey. Those who can stay committed will have the best chance of seeing meaningful returns. Looking at the bigger picture, both Iraq and Vietnam are becoming more integrated into the global economy. Iraq's compliance with international banking standards is giving investors more confidence. Vietnam's crucial role in regional supply chains has elevated its importance on the world stage. This international recognition provides even more support for the long-term prospects of both currencies. Foreign investment is another massive driver. In Vietnam, tech and manufacturing giants are pouring billions into the country, driving up demand for the dong. In Iraq, reconstruction projects and new oil partnerships are attracting investor interest. Tracking these foreign investment trends can give you valuable clues about where the dinar and dong might be headed next. For Vietnam, watch metrics like export performance and rising reserves. For Iraq, keep an eye on oil capacity and fiscal discipline. Positive trends in these areas have historically come before a currency strengthens. Be very careful of misinformation. There are a lot of people out there claiming to know specific dates or guaranteeing overnight wealth. No one can predict the future with 100% certainty. While both currencies have strong potential, any appreciation will happen gradually, in line with real economic progress. Stick to official reports and credible analysis to avoid costly mistakes. So, what's the big takeaway? Under the right conditions, Iraq's dinar could rise toward $5.90. And Vietnam's dong could move toward $4.29. Both nations are powered by favorable demographics, rising investment, and major structural reforms. For investors, the lesson is simple. Success will come from patience, careful monitoring, and realistic expectations. This isn't a get-rich-quick opportunity. It's a chance to position yourself for significant long-term gains. In closing, Iraq and Vietnam are at pivotal moments in their economic histories. The projections we've discussed are realistic possibilities if conditions stay on track. For investors, the opportunity lies in staying disciplined, following real developments, and committing to the long view. This could be the start of a historic new chapter for both currencies and for those who hold them. Thank you so much for watching. If you found this information valuable, please give this video a thumbs up and subscribe to our channel for more updates. We'll see you in the next one.